Hello traders, the title of the video is how to avoid the Elliott wave flat correction, gigantic trading mistakes like a pro. So you have been using the flat correction, but there is a gigantic flat correction trading mistakes that one must avoid. In this tutorial, I will share with traders how to avoid Elliott wave flat correction, gigantic trading mistakes like a pro. Alright, let's get started. The financial instrument that we are analyzing is price line, the price line group incorporated, EPIC PCLN, Papa Charlie Lima November. And I've been counting Elliott wave here before. You can see, this is the first wave, second wave, a third wave has been extended, a fourth wave, and the fifth wave. All right there. All right. So suppose you are here, you have counted your wave 1, 2, 3, 4, 5 waves all the way here, and you see 3 move down, 1, 2, 3, 1, 2, 3. So you will be thinking of, all right, the flat correction. But if you are here, you will also apply Fibonacci extension to that fifth wave. I need to remind traders that when we are counting Elliott wave, we are going one step at a time, following the price. And once we apply the Fibonacci extension to that fifth wave, we will highlight the 138.2% level, assuming that if there will be a flat correction, an expanded flat correction, that expanded flat correction will stop somewhere near the pink line, which is the 138.2% Fibonacci extension level of the fifth wave. All right. But at this junction here, we can see that we see a double retracement, 1, 2, 3, 1, 2, 3. So what will be going through our mind here is that our expanded flat correction could not reach the 138.2% level, though it went a little bit above the fifth wave. It has stopped near the median line between the high of the fifth wave and that 138.2% Fibonacci extension level. So after this move down, as you can see on my chart, I draw this line there, 1, 2, we will be expecting the C part of the flat correction. At that point in time, we were not making any mistake, all right? But there is a small mistake that probably we were making. But if we were only on the monthly chart, we can be quite satisfied with our wave count. But still, even if our wave count is not correct, all right, we will make excellent trading decision because we are following the price. We are not violating the current market pattern, which is a rising channel. All right. So you see the price. If you draw this trend line connecting this point and this point, this move down, retest it right here on the edge of that bullish trend line. So everything is working good, even if our wave count is not 100% correct. All right. But the mistake that are the gigantic flat correction trading mistakes that I want to highlight here is that if you are here, so at this junction here, we'll be saying that that's the B part of the flat correction right there, and we will be expecting this. This will be the second wave of the C part of the flat correction. So this is the first wave of the C part of the flat correction, second wave of the C part of the flat correction, and we'll be expecting the third wave of the C part of the flat correction, and so on, coming down 1, 2, 3, 4, 5. That will be the forecast that we will make at this point in time, because we have counted 5 waves and we see a double retracement, and we are expecting, okay, a price to come down one step at a time. So we'll sell here, and we'll be looking for opportunity to sell here, waiting for the third wave of the C part of the flat correction. Nothing wrong with it. So, but now look what's happening. The price is now going up. The gigantic flat correction trading mistake that a lot of area wave traders are making is that traders are not paying attention to the higher degree wave count. So we count the wave on a monthly chart. We need to check the yearly chart. We count wave, okay, on any, or for instance, on a daily chart. It will make sense to check the weekly chart or monthly chart. We count area wave on the weekly chart. It will make sense to check the monthly chart and the quarterly chart to see the bigger picture. Talking about a higher degree wave count, if we go now to this is the mistake, this is the gigantic flat correction mistake. On a yearly chart, it looks to me, if you look, apology to trader because I don't want to remove my line. It looks to me we have the first wave of a higher degree. This is the tiny, this bearish candlestick bar on the yearly chart. That's the tiny second wave right there, and followed by the third wave of a higher degree. Feel free to disagree with my wave count. The third of a higher degree now is become clear to me is ending here. It's ending here, and we have a flat correction, which is the fourth wave of the higher degree. We are now in the fifth wave of the higher degree. So the flat correction, that if I go back now to the monthly chart, you will see clearly what I'm talking about here on the yearly chart. Let's go back to the monthly chart. So we'll say this is the first wave of a higher degree. This is the second wave of the higher degree. And this is the third wave of the higher degree. And the flat correction, 1, 2, 3. It's not a proper, yes, it is a flat correction. It's a classic flat correction, 1, 2, 3, 1, 2, 3. Stop at the low of the A part of that flat correction. This is the low of that flat correction, the low of the A part of that flat correction. So we may say this is a classic flat correction that has been formed here. So for the higher degree wave count, that flat correction that we have here is the fourth wave of a higher degree. So now what we see now happening here, this is the fifth wave of a higher degree. It looks to me that it has been subdivided into a 5 Emmanuel wave. 1, 2, 3, 4, 5. We are now in the fifth wave of a higher degree. At this point in time, because we can only see the yearly charts, all right, unless there is a bigger cycle in place, that's all we can say. One step at a time with the information that we have, that's all we can say. 1, 2, 3, 4, 5. So we will say that the higher degree fifth wave is ending here. It has started, that higher degree fifth wave has started right here. So this is the fifth wave of a higher degree. The flat correction that we were looking at here is the fourth wave of a higher degree. And from here all the way up here, that's the third wave of a higher degree. The second wave of a higher degree, that's a tiny one that I was showing you on the map on the yearly chart. And this is the first wave of a higher degree. But the gigantic trading mistake that the flat correction are making is because if we stop on a monthly chart, we will assume that the correction will begin, we will have a proper, fully fledged, expanded flat correction to correct this trending first up to this point, as I showed you at the beginning of this tutorial. All right, so be aware of it. If you see a flat correction on any higher time frame, because the flat correction at the end of an uptrend is signaling to us that a correction has begun. Okay, but if on the higher degree time frame, all right, that flat correction is corresponding to the fourth wave, we are likely, all right, to see another move up. This is the scenario that is taking place here. So you may be wondering, Joe, why are you talking about this video today? Why are you talking about this subject today? The reason why I'm recording this video is that with more practice, we encounter different challenges, we see different scenarios, and we are improving our area wave analysis, improving our area wave strategy. All right. So I hope you'll find this video also useful. You see a flat correction, pause it there. We may have a classic flag correction, a running flag correction, or an expanded flag correction, because we usually see the flag correction at the end of the trending fair or at the end of the multi-wave. What is going, the first thing, which is normal here, it's normal to think that, okay, you will count down 1, 2, 3, 4, 5 to correct this move. Nothing wrong with that. But on the other hand, we need to bear in our mind that flat correction may be a corrective wave, usually the fourth wave, of a higher degree. If that is the case, we will expect another move up. That's why we say to trader, the area we count is one step at a time without assuming anything. This is the gigantic flag correction trading mistake that we must avoid. All right. So we are now, so you can see that the price now at 161.8% Fibonacci extension level. All right. I will apply now, what I will do, I'll apply Fibonacci extension to the first wave because that's the most important wave for applying the Fibonacci extension. All right. It's a very tiny first wave. Well, the price is quite very tiny first wave. If we apply it all the way to the end of the third wave, all right, the price now at once is in the zone of the median line, is near the median line between the 161.8% and the 138.2% Fibonacci extension level. In all cases, right now, we are coming to the end of the fifth wave. But one more time, as I told you before, whenever we hear the word fifth wave or third wave or first wave, those waves can be extended. Though we see an extension here, that may also form the first wave of, the fifth wave, the first Mano wave or the fifth wave, or it can be a part of the third Mano wave or the fifth wave that is extended. So we may say first wave, second wave. Now we have the third Mano wave that is of the fifth wave that can also be extended. If the extension is taking place here, that will make the matter a little bit complex. But to avoid trading mistakes, here we are seeing a bit of weakness, on this monthly chart. You see all the shadow here, this doji here, and this one here. This is a weakness occurring here at the point when we are labeling something as the fifth wave. So in this case, in order to control the risk, practically speaking, practical area wave trading will now implement a top-down trading method by going to the signal time frame, which is the daily chart, to see whether there is truly a weakness developing here, and then we take it like a pro. Like a pro means that you use a different time frame trading method. Trader hate me when I say that all the time. So one more time, you can see that there is a triangle here on the daily chart, which is the signal time frame. So all we can say at this junction is that anything is possible. All right, we have a triangle, anything is possible. They are buying on the edge here, so there's a resistance on the top there. So the only thing that we'll say to trader is priority to bullish signal above that triangle and priority to bearish signal below that triangle. Break above, retest, turn around, break below, retest, turn around. Or if one want to sell, the best place to sell is on the edge of the top of that triangle, as trader did here. Now we are the lower part of it. Will they push it out of the triangle? Anything is possible. If the price is coming out of the triangle, we can use the height of the triangle. I'll use a conservative measurement like this, or just from here to here. All right, if it start coming out, we use that distance between the two horizontal lines. I just use a conservative measurement, and then we project it down at the breakout point, or breakout point up, or breakout point down. All right. If you have any question or suggestion, put in the comment section, and in due course, I will be recording another video to answer your specific question. I always read all the comments. As I proved it today, I recorded one video today. The title of that video was a practical area wave flat correction trading tips and tricks. I recorded that video because a trader, I think it's a Torpa, a YouTube channel called Torpa, that asked a question to record more video about the flat correction, and that's why I recorded it. So do not hesitate to put your comment in the comment section, and in due course, I will be recording another video to answer your specific question. If you find this video truly useful, let us know by giving us the thumbs up. If you think that this is another blah blah blah, let us know by giving us the thumbs down. This will put us under pressure to improve our next recording. But if you think this is an essential tutorial, feel free to share with your friend on Google+, on Twitter, and also on Facebook. We are the TSTW24 traders talking about how to avoid Elliott wave flat correction, gigantic trading mistakes like a pro. To summarize this video, the flat correction usually occurs at the end of a trend, and when the flat correction is occurring, we are expecting a correction. Sometimes that flat correction may be just the fourth wave or a corrective wave of a higher degree. One should always check the higher time frame to see whether there is a higher degree wave count, the wave structure in play, and that will help us to avoid this gigantic trading mistake. Until the next time, enjoy yourself and be very happy. We are the TSTW24 traders talking about how to avoid Elliott wave flat correction, gigantic trading mistakes like a pro. Happy trading to you all, and speak to you soon.